Federal Reserve Chairman Ben Bernanke explains the extension of Operation Twist, the program that involves selling short-term debt and buying long-term debt instead of another round of quantitative easing or QE3.
We're prepared to do more. We have to get, I think, further information about the state of the economy, about where things are going, about what's happening in Europe. I guess I would add to that, though, that each of these non-standard programs does have various costs and risks associated with it, with respect to market functioning, with respect to financial stability, with respect to the exit process. And so I don't think they should be launched lightly. I think there should be some conviction that they're needed. But if we do come to that conviction, then we'll take those additional steps.
Wall Street believes those additional steps will eventually include QE3, given the Fed's updated forecast shows higher unemployment and slower economic growth through 2014. Bernanke insists the Fed is not running out of tools, although help from Capitol Hill would be a good thing.
I wouldn't accept the proposition, though, that the Fed has no more ammunition. I do think that our tools, while they are non-standard, still can create more accommodative financial conditions, can still provide support for the economy, can still help us return to a more normal economic situation. That being said, again, any other support that is forthcoming, any other economic policies that are undertaken that are helpful in terms of making our economy stronger are welcome, but I do think that monetary policy still does have some capacity to strengthen the economy by easing financial conditions.
Answering a question about Europe, he had this to say.
We think that the policymakers in Europe have very strong incentives to get this right, and we're very hopeful that they will get it right, and we're in close contact with them as they work on these issues. But again, it's also important for us to be prepared for any further problems that might emerge from Europe, and we have been doing that. For example, we recently did our stress tests of the large bank holding companies, make sure they had enough capital, even in the face of a severe financial crisis or a European crisis. We have been monitoring the exposures of banks and other financial institutions to Europe. And, of course, monitoring the situation there very closely.
A reminder, QE3 is not off the table.